Welcome to Canada's podcast.
At Silicon Valley Bank, we help innovative technology and life science companies grow. If you're ready to take your next step, discover how Silicon Valley Bank's founder-friendly financial solutions, industry insights, and connections can help you move your bold ideas forward fast. Go to www.svb.com/Canada/connect. Take your next step with Silicon Valley Bank.
Hi, this is Angela Fay from Canada's podcast. Today, access to affordable capital to start or grow a business is a number one consideration for any entrepreneur or business owner. Banks are an obvious solution. Choosing a bank or capital partner is a critical decision. Today, we're providing you some insights on a relatively new business in the Canadian finance scene, Silicon Valley Bank. So we're talking about why Canadians should invest and borrow from Silicon Valley Bank. We'll be looking at what are the internal workings of how SVB works, what makes them unique, and some Canadian finance venture tech trends. And who better to talk about those things with us but Caterina Papadakos. Katarina holds a BA in political science from the University of Victoria and an MPA for the University of BC's Sauder School of Business. She volunteers as a member of CARE Canada Vancouver Council, supporting and helping women and girls and their families get out of poverty in developing countries. She lives here in Vancouver with her husband and son, enjoying snowboarding, paddleboarding, and hiking locally. And of course, experience culture, food, and landscapes globally, most recently in the South Africa's Kalahari Desert. Katarina also leads the technology banking effort of SVB in Western Canada. Before joining in 2020, she served as the director of Espresso Capital, where she led venture debt financing for tech companies in Western Canada and opened new US markets for the firm. Katarina was also director for the technology and innovation group at BMO and launched the bank's technology lending program in BC. She has had roles in trade and Invest BC, where she's helped businesses in the province develop their export and foreign investment strategies. Katarina, welcome to Canada's podcast.
Thank you. Great to be here.
Thank you. Now, I'm curious, what attracts you to the work you do, both previously and now with SVP?
Yeah, I think, there's some differences in the roles I've had over the last 10, 15 years, but then there's some common threads that sort of connect the experiences. And I think one of the main common threads is just working with entrepreneurs, companies, people that are passionate about growing their business and, making disruptive changes in their industry. So I think that's something that I find really exciting. And I love sort of getting close to the action, working with those entrepreneurs and their teams, starting from very early stage and then growing throughout their life cycle to, when they have a big exit or some, big outcome and just being part of that journey with them.
Awesome. Well, and I want to get into a little bit about how Silicon Valley Bank works itself. Our traditional idea of a bank is maybe bricks and mortar outlets in communities and where you can bank with or without a business. So can you give us some insight? Does SVB do any personal banking? Do you have outlets? How do you work?
So SVB in Canada is a lending branch. So our main objective in Canada is to lend to tech companies at various stages. We are also a global bank. So in other jurisdictions like the US and the UK and others, we have more of a broader commercial banking offering. So some of those companies in those areas will have their kind of business operating using SVB as their primary bank. From a personal banking perspective, we've got private banking in some areas as well. So we acquired Boston Private in the US last year. And so, there's a little bit of that. But in Canada, we are really focused on lending to Canadian tech companies.
So we're really more of a Silicon Valley lending institution right here in Canada.
Yeah.
Okay. And do you do any commercial or industrial mortgages as well? Or is it really just operations lending?
Yeah, we don't really have sort of mortgage products per se. I mean, a lot of companies can choose to use the funds that we lend them in, for different purposes. So our loans are really flexible and help companies achieve what they're trying to achieve. And so there's some loan types that are very specifically aligned with accounts receivable or whatever. But then there's others that are more broad. And so in those cases, companies might use funds to purchase equipment or have more of the traditional investments in their business.
Well, and do you have any credit card associations as well? Is that part of your offer?
In the US, we've got a corporate card. So actually, a lot of Canadian companies also use us for their US banking and US credit cards. So we do have that. And we're, always looking at how we want to expand our product offering in Canada. But right now, we don't have that.
Well, and in my experience here on Canada's podcast and interviewing lots of companies globally looking to do business in Canada and Canadians looking to do business abroad, we have a reputation, if you like, as Canadians for being safe to do business here. So does SVB offer any loan guarantees, or are you government assured? Or is there anything that sort of reinforces that trustworthiness in how you operate?
Yeah, I think, we're not a traditional lender from that point of view where, they want to have 2 or 3 ways, out of a deal. And so they want to have, your cash flow and your house and so we're not operating like that. We're in the innovation sector. And so we have our own model of how we assess risk and what amount of debt is the right amount for a company. And so we're really more focused on growth, helping companies grow and expand, and working with them as well as their investors to be part of that. And so we don't have the same lens, I guess, as, more of that traditional kind of lender.
Well, and let's talk a little bit about that lens, just to give me a little bit of insight on how you evaluate business loans. And perhaps we could do that by talking through the process of how, say, a startup entrepreneur who's maybe under, their first $1 million rollout to the growth stage companies. What would be the process in each one of those scenarios through the SVB lens?
Yeah, so we work with companies at all stages. We've got different resources and support at different stages. So we want to get to know founders as early as possible and understand what they're trying to achieve and try to help in any way we can. So usually early stage, prior to companies raising an institutional round of investment, we're usually more providing other types of support like introductions, connections. We've got a lot of information and for example, webinars and other types of things that give education to those founders as far as hey, learn from the kind of others that have done it before and don't sort of feel like you're alone and you have to figure it out yourself. So anything from how to fundraise, how to evaluate term sheets, how to, all of these different things, we're hoping that our education kind of gets founders there a little bit quicker. And then once they raise an institutional round, whether it's like a seed round or, in many cases, Series A, that's when we start to look at the debt offering. So that's usually, starting out just with some initial debt and then looking to grow our relationship with the customer and the client over time, just starting out, based on their fundraising that they've done, they might qualify for something like $1 million. And the idea is as they spend that, as they grow the business and as they mature as a company, that $1 million might turn into, 3, 4, 5, 10, 20 over time. So we want to continue to fund businesses through their life cycles.
Well, and that's a great segue. And the question I think is everybody wants to ask, and I know it might not be politically correct to ask, but what are your interest rates and sort of terms on a typical debt financing loan?
Yeah, so we have rates that are like, so all Canadian banks, let's say, are considered like senior lenders. So, we're in the same range. So as what you would find like at any bank. So it depends. Everybody's got like their own risk profile for a certain company. So it's not like a standard number where everybody's going to get the exact same amount, but it's, call it like mid-single digit interest rate.
Okay.
And then, we also have other types of debt products that are more like junior debt products that are a bit more expensive, but the risk profile of that tranche of debt is much higher. So normally what you do is you look at how much a company qualifies for, and you give them a certain amount at sort of that senior debt pricing. And then if they're looking for more than that, we see if they qualify for that. And then, that's priced a little bit higher.
Katarina, how do you advertise at this point? How are you connecting with potential clients?
Yeah, so I think all of us that are on the team have our own networks and, have been around for a while. And so especially during the pandemic, there's a lot of people that are really relying on some of those networks, and, people know what we do. They have clients that they're trying to support, and we sort of share introductions that way. So that's definitely a big source of new connections and relationships. I think we have some campaigns of like putting content out there and stuff like that. But, I think most of the time, because of the types of companies we work with, and they're very connected to the sort of the venture space, like companies get plugged into that, and then they find, that it's actually a pretty small community and most people kind of know each other. And so, if a company comes to me and they say, hey, I'm looking for this, and, whether or not they qualify for that, I also can say, hey, you know what, you should talk to this person or that person, or, like this is kind of a good next step for you. So I think just getting plugged into someone in the innovation community is really helpful. And then from there, use them and their connections and their networks to kind of, continue on.
So let's just talk about the size of your network at the moment. I mean, Silicon Valley Bank came to Canada in not that long ago in 2019. You've been on board since 2020. So how big is your team, and what kind of, breadth do they have across Canada?
Yeah, so we've grown our team considerably over the last couple of years. Now we're about 40 across Canada and continuing to grow. And we've got certain individuals that are focused on working directly with companies, others that are focused on working directly with venture capital funds and private equity funds. We've got sort of the underwriting teams. We've got a variety of people that are there to support our clients. So we're not the kind of bank where we're going to tell you, here's a 1-800 number and like, good luck. Actually it's been like noted by a number of clients where they actually find it like surprising how many actual people are there that they could call, if they need something. So I think even though maybe 40 people isn't a massive number, it is definitely, our focus to support companies and be available at all times.
I'm a little bit curious about a comment that you said where you've got some, I'm imagining, traditional account managers that have a portfolio of clients, but you also mentioned that you have sort of some representatives that are working exclusively with venture debt companies. How does that work? Who are they, and what are they looking at financing as a collection?
The VC, the folks that are working with VCs. Yeah. So there's two sort of approaches. One is looking at building relationships with VCs, because we bank and we fund so many of their portfolio companies. And so we need to have sort of a direct connection with those investors to make sure that we're aligned and we're, supporting them as well. And then we also have fund banking we'll actually lend money to venture capital funds in addition to just their portfolio companies.
Okay, interesting. So direct to the portfolio companies, but to the funds themselves.
Exactly.
Fantastic. I'm a little, and of course, that's a curiosity for me. So is it a relationship strategy, a risk reduction strategy, or all of the above to actually partner with VCs specifically?
I think, maybe all of the above. Like, I think it is a relationship strategy because, once the money's out the door, like, you need to make sure that whoever is on the other side of that is trustworthy and reliable and, is going to be accountable and all of that. And so when they do have a VC sponsor that's invested in the company, they have some diligence that they've already done on the founders and the team and the technology and all of that. So, the ones that we have a good relationship with, we kind of know some of the vetting that they've done. They're also looking at, for their portfolios, they're looking at like which companies are going to lead the category or which companies, they're picking to be the kind of leaders in their sector. And so, they're really smart people, and we think like they have, the responsibility of their funds to deploy. So, we definitely take that as a factor as well. So the relationship is important. And then, if you have various capital providers around the table, when things inevitably go not exactly as planned, you have others that we can all come together and come up with a solution. So that is certainly like a bit of a risk reduction scenario.
So I wanted to talk a little bit about how Silicon Valley Bank is unique. And we've already talked a little bit and highlighted, the relationships with venture capital firms where there's a little bit more of a network support from multiple, supporters that are also already, you've highlighted those as making you unique. But the finance landscape in Canada, I mean, we have the 5 big banks, we have credit unions, we have provincial, national, even public banks. So I'm curious how you see Silicon Valley Bank fitting in or standing out from all of these competitors in the finance world in Canada.
Yeah, so I, of course, would say we're standing out. But I think, how I would describe that is, as a bank, globally, we've been around for almost 40 years. So, exclusively working with tech and innovative companies. And so that's something that we're 100% committed to. And that's something that I think we're the only bank that can say that. So, whereas the Canadian banks that you referenced have personal banking, commercial banking for all sorts of different companies, and they might have like a division that's focused or starting to focus on the tech space.
Okay.
This is all we do. And so we're 100%, fully invested in that space. And through the last 40 years of experience, like there's been different cycles in the tech ecosystem. And so I think we've also proven that we're good partners through some challenges. So I think anybody can lend money when things are great and,
right.
But it's what do you do when there's a challenge and how do you respond? And I think we've just had that proof point, that we're really good partners. The other thing I would say is that because we work with so many innovative companies, I think it's somewhere in the ballpark of like 30,000 globally. And that represents like half of the VC-backed companies in the US and, just tons and tons of experience over the last number of years. I think that has just created this depth of knowledge in our organization where, it's not like you're looking at something for the first time. You have that pattern recognition. You've seen it over and over again. You know what to look out for. And so you can act quickly. You can understand the business and sort of work more strategically with those founders versus having like a format where it's like, here's a formula of how we do, like, it's not really the approach that we take. It's more about understanding the businesses and having that deep sector knowledge.
The team at Silicon Valley Bank in Canada can help you move your bold ideas forward fast, bringing global expertise to founders, investors, and innovators. Visit www.svb.com/Canada/Connect to find out more.
We talked a little bit about interest rates. We never talked about term. I know you said, I'm going back now to a question that I forgot to get clarity on, but quite often you're in it for the long haul with your relationships of the companies that you fund. So what sort of, are we talking, 5 years through startup or startup to sell, or are we talking, the 20-year long haul durations? What sort of experience do you have?
Yeah, I think so we've got some that are more like working capital facilities that are, a couple years and you renew it every time. And, that's sort of like an ongoing thing. And then for term facilities, it's usually, in the 3-4 year mark to begin with. And most of the time what happens is when those companies go from one milestone to the next, or like maybe they're raising their next round within that few year time frame, then we usually refresh the facility and kind of give them a new amount, like a larger amount, and extend the term. So it's something that's set, but I guess the majority of cases is that we set it and then they hit the next milestone. We give them a new facility, refresh it, and continue on with that as they scale.
Okay, perfect. Well, and I just wanted to come back a little bit to tech. And historically, especially with the name brand of Silicon Valley, tech has been internet, software, computers. Yet Canada is traditionally a resource-based economy, agriculture, oil, fishing, lumber. So when we are looking at tech, I just wanted to sort of describe a scenario so that people across Canada could perhaps see themselves as a tech innovator. And I thought, let's use the example of a self-driving tractor, for example. There's a farmer looking to buy one. There's a manufacturer looking at producing parts, and there's a vehicle manufacturer looking to buy one from scratch. Who would you lend money to?
Yeah, so we would lend money. We would lend money to the company that's producing the vehicles. So
right,
it might be. I mean, it might be the parts. If the parts are really proprietary and they're and that's a business in itself, and it might be the manufacturer of the vehicle. If that's sort of where the innovation lies. I think it's really just like, where's the innovation taking place, and sort of which company is the one that would be looking to grow really quickly and scale, and just become like a larger and more dominant player. Okay. I think that's where we really shine, is helping companies do that, because we're comfortable with that type of rapid growing business and ways to support them. I think if it's more of like a traditional kind of, operation where they're looking at just kind of coasting along and being, like just a small business that's profitable and that's great. I think those are less sort of our target. We're looking more at the kind of big venture scale type ambitions over time. And not everybody gets there, but those are kind of the types of companies that we typically work with.
And I understand kind of the value proposition for startups. I'm curious, if I'm maybe a little bit more mature business, and I've been with a Canadian bank for years, do you find people switching to SVB or adding you as a capital partner for a little bit more mature companies? And at what stage of their company growth would you want to partner with them?
Yeah, we definitely find companies switching at all stages. I think it's about what we can offer versus the other banks. I think, like I said earlier, our offering is really conducive to companies that are trying to, take that leap and be the innovative leader. And so some of that results in things that Canadian banks are not comfortable with, like burning cash and, really putting their foot on the gas. It's not something that's going to have 2 or 3 layers of security, tangible security that's going to make a traditional bank comfortable. So I think when companies are looking to accelerate or, maybe raise another large round, that's where we come in, and we're able to come up with something a bit more creative in most cases.
Well, and something that you and I talked about before the podcast started was the, finding a capital partner within, quickly, either within startup or growth, because if you wait too long, the options are limited. It's sort of the mindset of being stuck in, full ownership and perceived less risk by not, bringing on capital partners. Can you respond to that as far as why you believe getting a capital partner early is actually good for business?
Yeah, I think, and every entrepreneur has to decide what they want to do with their business. So, some want to be owning 100% of it and have like slow, steady growth, profitable. That's totally fine. That is like one path that you can choose to take. I think if you are considering raising outside capital, sometimes that path, the slow and steady path, does you a bit of a disservice, because growth is really being rewarded right now. Growth is being rewarded a lot more than profitability right now. And so if you can take on some outside capital, ramp up, if you have a use of funds that'll help you ramp up your growth, all of the other pieces will come together a lot more easily in terms of, your valuation is going to increase, your opportunities to eventually be acquired or have an exit, it will be a lot higher likelihood. So I think, I've seen companies wait a bit too long, I think, where they just don't, they want to be a little too sort of tight with, bringing on outside capital, and it's resulted in a slower growth. And then ultimately, when they do look to raise outside capital, not everyone knows why you didn't grow that fast. It's like, it's kind of like if you had the money, you would have grown. Well, maybe not. I don't know. So like, you can't assume that people are going to, take that leap with you. I think it's good to bring on partners when you feel like you have a good use of funds and you're going to really put that money to work, and it's going to show in your product development or your growth.
Well, and I'm a little bit curious about your comment about growth is being more rewarded over profit right now. I get that, but so profitability, I think, is, cash flow is key, of course, but profitability in the long run is also a goal. So what is being looked at if, the first few years of profitability aren't there? Is it the possibility of selling? Is it being bought out? Or is it the fact that we have the venture capital experts, and the mentors that could come in and actually assist with getting that profitability happening?
Yeah, I think, there's companies where they, in the beginning, you're sort of experimenting, right? You're seeing like, okay, I'm going to try this and I'll see what happens. I'll try that. And then once you hit something where you're like, okay, I'm spending $1 on this marketing and I'm getting like multiple dollars back of, growth, like then you've hit something, and then you need to think about putting some more capital behind that. And that's where, that's where it makes sense to spend those outside dollars, because you're getting that kind of big return on those dollars spent.
Yeah.
So I think I'm not encouraging people to just spend and kind of lose money like for no reason. It's sort of like when you find there's some positive outcome from spending the outside capital, then that's investment that's going to scale your business quickly. Your business is going to be worth a lot more faster, and it's going to draw attention for, if you're looking to be acquired, or if you're looking to do some kind of large fundraise, or if you're looking to go public, like all, you kind of need to show that you're a leader in your sector, and that you're sort of worth investing in down the road.
I want to switch tacks a little bit and just talk about venture tech trends in Canada overall. SVB has been, and now can I just to clarify, should we be using the phraseology SVB or Silicon Bank, or are they interchangeable?
SVB is, a lot of people just use SVB.
Okay.
Yeah.
So in SVB, you've been here since 2019. Have you seen any geographies or clusters of sectors that you've tapped into specifically here in Canada?
Yeah, so I think there is a lot of data that supports this as well. Like Ontario, Quebec, BC are the three most active provinces in terms of the tech space. But we also have a lot of clients in across the prairies, Atlantic Canada. So I think, that might be shifting. A lot of companies, especially during COVID, went to more remote workforces, looking to find talent, looking to find places where they can have a better lifestyle. Their employees can have a better lifestyle. So, there's more of a shift to going to some other communities. And I think that probably is a trend that's going to continue because, there's some benefit in being in the sort of, Ontario, Quebec, BC regions, because you have others that have done it and you're sort of in a community. But on the other hand, cost wise, it does make sense to also look elsewhere.
Well, and do you see any link between education and innovation?
Yeah. So in Canada, that's one of the things that I think where we really shine. So like we've got world-class universities that are developing technologies that are spinning out into really fantastic companies. And I think that's one of the key advantages that we have. So I would definitely say that that's a huge factor. Also talent, that are coming out of those universities that, not just the technology, but the individuals that can be sort of hired into some of these tech companies are really world-class. And I think that's something that we've noted. I think Canada also, of course, has a lot of government incentives for early stage companies. And that's a huge benefit for those companies in the early days where it's actually really difficult to find other sources of capital. So various grants or tax credits can really be a lifeline for companies in the early days.
And related to that, do you see any link between, the establishment of, I'll call them innovation hubs or incubators or, tech physical centers and, the businesses that are popping out of those?
Yeah, I think there's some of it is we've now, had a number of years or decades where there's been companies that are sort of homegrown, maybe exited. Those founders are now a second or third time founder. There's sort of this ecosystem of talent that's been built over time. So I think that also fosters sort of the next companies and maybe a bit of like a hub for different types of technologies. I mean, certainly when I look at Alberta, a lot more companies in Alberta are focusing on the oil and gas sector than, in Toronto, for example. Like there's just kind of they're near their end client. And we also see, ag tech in BC, Alberta, Saskatchewan, and, not so much in maybe PEI or whatever. So like, we're definitely seeing some of that, but I think there's also really interesting hubs. Like you mentioned earlier, there's kind of a traditional resource economy in Canada, but like that's changing really fast. Like we, of course, are going to always have that resource economy, but Canada is really on the map right now as like a world-class tech location.
Well, I've heard from SVB that more than 86% of new companies actually remain in their home province. So, and it kind of busts that myth that founders, exit and leave for the US. Can you, do you see that trend yourself?
Yeah, I think a lot. I mean, I've noticed a lot of people also moving back from the US and just wanting to, like, not feeling like they have to be in the US. Like there's enough connectivity with those US markets where they can continue to live in Canada and still, have a bit of a connection to the US that's beneficial to their business. I mean, Canadian companies are still selling a lot to the US. Like it's the number one market. A lot of companies that we work with, their expenses are in Canada and a lot of their revenues are coming from the US or globally. So I think there's always going to be that relationship, but I don't think that there's the feeling that they necessarily have to open their company's headquarters in those geographies. Like they might have a satellite office or they might just be operating in Canada.
Well, and I've heard another SVB claim that the pandemic helped erase geographic barriers. And this has proved to be a bit of a boon for the venture ecosystem with greater access to US investors for Canadians. And so I guess my question is there really more access to capital? And why and how has this been happening? Is there a reduction in red tape to allow more venture capital coming to Canada? What's really happening?
Yeah, there used to be a bit of like a saying or whatever that like VCs wanted to invest in their own backyard or be able to there was more of a focus on like, hey, I want to be able to be face to face with companies 2 or 3 times through the initial diligence. And then I want to be face to face like throughout the relationship over time. But I think the pandemic obviously made everyone a lot more comfortable with virtual meetings. And that really leveled the playing field in terms of, it's just as easy to have a meeting with somebody in a completely different geography as it is in your own backyard, during a time like this, right? So I think that really accelerated people's comfort levels in that. I think it was going in that direction anyway, because people were just always looking for the best deals. And we would always find there'd be somebody from, all different funds coming up here quarterly or monthly to sort of meet with a few companies. And now you can do a lot more quickly from your office and then invest more broadly in different geographies, just finding the best companies. And they're not all in some of the key centers anymore. They're all over the place.
Oh, and that's very interesting. I think that coast to coast finding unique opportunities that are popping up all over the place is probably something that's going to be staying with us for the long term now, because, COVID helped disrupt geography in many respects. So
I was just going to say, there's also just a lot more capital out there now than there's ever been. And so because there's so much more capital now than ever, investors are really looking to find those good deals and good companies to partner with. Like founders have tons and tons of options. It's sort of flipped from a number of years ago where founders were like really struggling to find the investor that will take them to the next level. Now, if you're a good company, you're going to have competing offers from all sorts of investors, and you're going to be able to negotiate and dictate a lot more of those terms.
And that's right. So there really is a lot more access to capital. There are a lot more people getting private venture capital realm. Very sad. And I've got to ask the question only because, it's the cab drivers are talking about it. It's kind of talk on the street is, decentralized current finance and cryptocurrencies and this emerging market there. What's your opinion on decentralized finance? And is there any talk of adopting it at SVB?
I think, it's something that we're watching really closely. And I think there's a lot of really interesting companies, particularly in our own backyard here in Canada as well, that are innovating in that space and have received a lot of investment and support. So I think it's more quickly becoming a mainstream option. But, as far as how we interact with those companies or what we're able to do with them, I think we're still figuring it out and I guess working alongside them. Yeah.
Absolutely. I'm giggling a little bit because I'm aware there's even whole entire countries, like El Salvador. And I think this morning I thought I saw that Kenya has introduced their own cryptocurrency in the country. So we can't afford not to watch the space, at least a little bit, all of us, really.
For sure. Yeah.
Cool. Katarina, what's our call to action? I would like our listeners to be able to tap into what's going on at SVB. I know we've got some resources that we can direct people to. The first one, there's an entrepreneur's playbook. Do you want to share a little bit about what that's about?
Yeah, absolutely. I think, we've got tons and tons of resources. Entrepreneur's Playbook. We've got a YouTube channel for startup banking. We've got research documents on our website. So I would highly recommend just taking a look at some of those resources and using them. They're really, really good, really sort of thought leadership pieces and can be helpful. The research can be helpful if you're putting a deck together and you're looking for some stats for your market. And the fundraising workshops can be super helpful because, it's our team and also some conversations with VCs. You're hearing it directly from them as far as what they want to see and what you should do to maybe get their attention. So I think, tapping into that would be super helpful. And if you think you're at the stage where you want to, look at debt or look at working with us more closely, then definitely reach out to one of us to learn more. I think there's a contact link on our website for SVB Canada. So that's the best way to reach us.
Absolutely. And I can just say, I've had a look at the Founders Playbook. I'm just going to say it out. The website is svb.com/founders-playbook. And if you just search SVB on YouTube, there are 10,000 or more subscribers to the video collection. And I love it because it's very clear. They're little soundbite videos where you can go in and have a look and ask a specific question and get a specific answer, which is fantastic. And of course, you can also sign up to receive the email notifications on svb.com/Canada/email subscription setup. So I encourage all of our listeners to check that out. Katarina, is there any last comments you'd love to say to Canadian? And of course, we have a global audience of entrepreneurs watching the space of what's happening in Canada. Do you have anything else that you'd like to say?
Yeah, I would just say that, I think I would say this, and I've heard it from a lot of investor friends of mine, like there's never been a better time to be an entrepreneur, and there's never been a better time to look at scaling your business. So if that's what you're doing, just, keep going with it. And I think we're looking at really a lot more momentum in the next years to come. So excited to work with many of you going forward.
And we're excited to share your story and SVB's story here on Canada's podcast, where collectively we are making next happen. Katarina, thanks for joining us today.
Thanks so much.
The Silicon Valley Bank team in Canada can help you take your next step. Find out more about the bank that has nearly 40 years of global experience supporting venture-backed tech and life science companies and their investors. We're in Canada to help leading innovators reach the next stage faster. Visit www.svb.com/Canada/connect. Take your next step with Silicon Valley Bank.